Hello, my name is Andrew Thate from Minds and Money. Delighted to be joined today by Marshall Koval, who's the President and Chief Executive Officer and also Director of Lumina Gold. Delighted to have you with us today, Marshall.
Thanks a lot, Andrew. I appreciate you having us.
Marshall, I know that the crux of this interview is going to be about the PFS that Lumina Gold have just released. But before we get to that, some of our viewers may not be too familiar with the Lumina Group. Can you give us a bit of a background about the company?
Yeah, Andrew. Yeah, the Lumina Group was founded by Ross Beaty sort of in 2003. And the initial focus of the company was Ross believed that we'd be moving into an upcycle in the copper space and went out and acquired 10 high value copper assets in mining friendly jurisdictions. And then it was a real option play, but once you have the properties, you have to do work. And ultimately, we went through those properties and raised about 270 million and returned about 1.6 billion to shareholders. And I joined him in 2004, and most of the management team of the Lumina Group has been together for plus 10 years. Leo Hathaway, our chief geologist, joined in 2004. So we've been around for a long time. Today, within the Lumina Group, we have two companies, Lumina Gold, which has our Cangrejos project, which you just mentioned. We produced the pre-feasibility study and put out the results a few days ago. And then we have Luminex, which has all of our other assets in Ecuador, both gold and copper assets. And the flagship project there is the Condor project. But we also have a JV with Anglo American in Luminex and with Jogmec, which we could talk about a little bit. But really the focus today is the pre-feasibility study we completed at our Cangrejos project.
So let's talk a little bit about that pre-feasibility study. It's just kind of come out, very, very exciting, generating a lot of sort of news flow. Why should it be of interest to investors?
So I think there's a couple of things. So it's the 26th largest project in the world in all categories, production, development, and such, based on resource size. We have 20 million ounces of gold in the resource, about 2.5 billion pounds of copper in that resource as well. You know, when you look at the consolidation that's happening in the mining industry now, we've got quite a few deals on the make now. These major and mid-tier companies are going to have to do reserve replacement. And, you know, the business strategy of the Lumina Group historically has been take on big projects, add value by de-risking them and moving them down the development pathway and ultimately being taken out and being put in production. You know, this project's about $1 billion of initial capital. So a good example of that is the Caserones mine, which Lundin just acquired, was one of our original projects that we sold to Pan Pacific. They built it. And it's interesting now that Lundin just came in and made a deal on that project. So that's kind of the way we operate, and that's what we're looking at with Cangrejos. It's the only asset in Lumina Gold.
Mm-hmm. And what is its grade and mine strip ratio like?
So the strip, that's one of the real advantages of Cangrejos. It's got a really low stripping ratio. There's two pits, the Cangrejos pit and the Gran Bestia pit. Over a 27 or 26-year mine life will produce about 371,000 ounces of gold annually and 41 million pounds of copper. And the stripping ratio is for all of it is 1.26 to 1. So it's a really low stripping ratio that helps with the mining cost, and it feeds in a lot to the positive economics of the project.
Mm-hmm. So I guess that looking ahead to the next, say, 6 to 18 months, what are the next steps for the Cangrejos project? What are you kind of, you know, what are you hoping to achieve over those timelines?
Yeah, that's a really good question. So there's a couple of key things to get the project ultimately permitted and put into production in Ecuador. We have an exploration investment protection agreement. It was the very first one done in Ecuador. There's no bilateral trade agreement between Canada and Ecuador, so this investment protection agreement for exploration was the first. We're going to amend that to make it an exploitation investment protection agreement, and that sets your royalty rates, your tax rates, your duty rates, and other conditions related to the project. So Once you have a PFS in hand, which we have now, we'll finalize negotiations with the government on that. And that gives us a term sheet that we can move forward with the feasibility study and use all of that in the study. At the same time, it allows us to go in and start to scope. We finalized what the facility layout is, scope the EIA. We're doing a lot of baseline monitoring, and we'll be able to put together a plan of operations, impact assessment, mitigation. So over the next 2 years, that's going to be the key thing moving the project towards development, is getting the permitting in place, doing the feasibility study, and having the investment protection agreement in place.
Mm-hmm. Of course, Ecuador is well known for the Fruta del Norte project, and mine. But how well is Ecuador like as a place to go and do business if you are a mining company?
Well, we entered the country in 2014, and at the time it had kind of a punitive fiscal and regulatory regime, more along the lines of the oil sector, which was their primary natural resource in the country. Subsequently, between that time period and now, it's become very competitive through the couple of presidents that have come into play. And now it's very competitive fiscal regime with Peru and Chile, and it's the current president, Lasso, has been very supportive of mining. So it's been a really good environment, and it's probably one of the last systematically explored regions in Latin America and probably the world. Has the same kind of geology as Chile and Peru, and so there's a huge chance for discoveries. So it's going to become a cornerstone for the country going forward. And the interesting thing that just recently happened in March was petroleum's the #1 export, shrimp farming, and then it was bananas, and then mining. Now mining just passed bananas, and it's third. So it's very, very important to the country going forward. So, hopefully political stability and will continue, and I think it will.
One thing that I really like about Lumina Gold, looking through your presentation before this call, was that you're really passionate about ESG. Can you talk a little bit about Lumina Gold's ESG credentials?
Yeah. So when we look at Cangrejos, and we look at it in the broader context compared to other mining projects, let's say, in the region or around the world, one of the things that's real positive about Cangrejos in Ecuador in general is the majority of the power generation is hydro for the project, so that lowers the carbon footprint. We're very close to the port facility where the gold copper concentrates would be exported from. And so that lowers, the emissions compared to other projects from an ESG perspective, and also, so from a social perspective and also a carbon perspective. We've incorporated dry stack tailings into the project design, and we'll recycle about 85% of the water from the tailings back up to the process plant. So, that's really good from a water conservation perspective. And we've done a lot of work with the communities. We believe in a real strong social license, so done a lot of work there, helping them with health, education, those sort of things. And the area around the project has been historically second growth timber. It's all been logged, and then there's a lot of grazing for cattle and such. And what we've done in areas where there has been impact within the lands that we control, maybe not impact by us, but previous grazing and that sort of thing. We planted 30,000 trees now, done a lot of habitat restoration. And so that's kind of the approach holistically in the design of the project. We put ESG right up there.
And you've also got the deal that you've just announced with Strategic Resources. Can you just tell us a little bit about that?
Yeah, there was an RTO with BlackRock in the vanadium space and Strategic Resources, and it was a company within the Lumina Group that Scott Hicks was running. And basically, we had an asset in Finland, and the RTO takes this vanadium property we have in Finland with the BlackRock project, which is permitted and construction ready and in the process of getting financing to be built, and did the RTO. So that's a great one in the vanadium space. I'd encourage everybody to look at Strategic. They kept the name Strategic. It's a new management team, but it's a great opportunity.
Mhm. Looking sort of like wider, just to beyond the Cangrejos project, what are sort of news and advances can investors expect to hear from either other parts of Lumina Gold or indeed for Lumina for Luminex resources over the next 6 to 18 months?
So for Lumina Gold, most of it is going to be, advancing the investment protection agreement, moving forward on, the environmental impact assessment over the next few years. But we're in that bottom part of the Lassonde curve where, there's not a lot of news flow coming out. Whereas Luminex is totally different. Luminex, our flagship project there is Condor. We did a PEA in 2021. It had 387 million MPV. It was about 180,000 ounces of gold a year, but it was a high initial capital. It was both underground and open pit, about 600 million. We've made a discovery here in Cuyes West. Now we're rescoping the project to look at starting with 2 underground mines at a much smaller throughput, about 4,000 ton per day, 5,000 ton per day. Look like we can reduce the initial capital quite a bit, but we've had some really high grade results from Cuyes West, sort of 4 meters to 25 meters of 4 to 30 grams sort of intercepts over 14 drill holes out of 22. Mm-hmm. So I'd encourage people to go to Luminex and look at what's going on. So we have constant drilling now, and we'll have a lot of news flow. And Luminex is a company with a market cap of only 40 million Canadian. And we also have a joint venture with Anglo American drilling a porphyry copper target called Pegasus. And the main deposit they're drilling right now is called Medusa. So if we hit on something major there, Anglo has to spend 57 million to earn 60% of the project. And then they can earn 10% more by taking us to a production decision. So there's going to be a lot of news flow out of Luminex, not quite as much out of Lumina Gold, but the PFS really cemented things for us. And one last thing on the PFS, we used 1650 gold and 375 copper. And we had a 2.2 billion MPV at a 5% discount rate and an IRR of 17.2%. But if you use current gold prices, it's got about a $3.5 billion MPV and a 23% IRR. So it has a lot of torque. The scale and the size of it has a lot of torque to upward movement in metal prices. So anyway, I think that's probably a pretty good summary about both the companies, and I'd encourage everybody to look at our websites.
Yeah, well, I think it's been a really great sort of summary of both Lumina Gold, also Luminex Resources, and the Lumina Group. We really do wish you and your team all the best for 2023. Certainly sounds a very, very exciting year ahead. That was Marshall Koval, the President, Chief Executive Officer and Director of Lumina Gold, and the interview was brought to you by Mines and Money in association with Redcloud. Thank you very much for your time, Marshall.
Thank you, Andrew.